You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music can mean only one thing. It is Education Wednesday. Time for the old Options Bootcamp, a.k.a. the program for you out there. The busy and maybe perhaps confused or intimidated retail stock trader. Maybe you're thinking about taking your first tentative steps into those options waters. Maybe you've already done so. Maybe it worked out well. Maybe it didn't. A lot of you on the latter category these days. These things can be tricky. Don't worry. We got you covered here on Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Reminding you, of course, that we don't just do this show here on this network. We do a lot of other shows here. Education Wednesday is a busy one, but of course, we also do volatility views every Friday. TWIFO, This Week in Futures Options on Thursdays. Interviews on Tuesdays, and a whole bunch of other fun stuff, the advisor's option, and so on and so forth, scattered in between. So you know where to go to get all of that. Wherever you listen into this, upgrade to the full network. You'll get hit pretty much twice a day with great content coming at you. So we'll keep you busy, informed, engaged, perhaps even, dare I say it, a little bit entertained, except for this other guy who joins me here on the show. Of course, I'm talking about the black-hatted one himself, Mr. Dan Passarelli, a.k.a. the founder of Market Taker Mentoring, a.k.a. the author of one or two options-oriented tomes. Mr. P, welcome back to the program, even though I'm not sure if I can vouch for your entertainment quotient, sir.
And some people refer to me as the handsome one on the show, but, you know, we don't have to talk about that part.
Those people are also known as the blind listeners. But, hey, we like them. We welcome all people abled and disabled here on the program. We also welcome all sorts of new perspectives and players in the market, including our friends over there in Demand Derivatives. Yes, this episode brought to you by the folks over at Demand Derivatives. They are a startup futures exchange and clearinghouse, trading the world's major assets in a creative new way. You guys already trade on an exchange. Here is your chance to actually own one before they go out and approach large strategic partners for funding, which you know are necessary to really launch any major financial and fintech endeavor these days. They set up a portal, a crowdfunding portal. You guys are familiar with those. You've seen them for a variety of other projects you guys like out there. So now regular traders, just like you, can have a chance to buy shares along with the big boys out there. You know where to go. It's demandderivatives.com. D-E-M-A-N-D, derivatives, so two D's in a row, demandderivatives.com. You can click on the crowdfunding portal to learn more. Just go to demandderivatives.com/crowdfunding. That'll get you there. The minimums are low. They've already raised, it looks like, over $100,000. So this thing is really rocking and rolling. But it also only runs until December 15th. So if you haven't participated yet, click on the link. Check it out for yourselves. I think you'll find it interesting. demandderivatives.com. Then click on the crowdfunding portal. As we head right on into our first segment, it is time for you guys to take the reins. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call, the portion of the show where you guys take the reins, your questions, your comments, your pearls of wisdom out there. Let's kick it off with this one from Theodore Domzalski. That name sounds familiar. He might be our food guy, Dan. He might be the guy who sends us all those cool photos of food that make us so hungry while we're doing the show. By the way, he's a repeat listener. Theodore said, he might win question of the week just for how he starts. He says, I love the network. Great job, guys. How about that new Mandalorian episode? Yes, I think he sent this in for our show last week. We didn't have a chance to get to it. But, of course, yes, chef's kiss on that Mandalorian episode. We were joking about Star Wars on the last episode. It seems like it's a repeat theme here on the show these days. But that episode was certainly, if you've been paying attention to anything Star Wars related for the better part of the last couple of decades, you know, most of the real good stuff has been going on the small screen. Not on the big screen. At least the big screen stuff seems to be pretty divisive to people. But the small screen stuff, particularly on the animation side, has been pretty popular. And I've had a chance to watch that stuff over the years with my little guys who was growing up. And it's a great entry point for people who are learning about Star Wars. And it's also extremely well done. So people have been saying for a long time, this is the best stuff going in Star Wars. Why don't they put this in live action? Why don't they bring this to the big screen as the big audience? And they finally did that this past week. They brought over a character that fans have been really excited about for, about 15 years, 10, 15 years, and finally brought her into live action. And the way they did it, it was amazing. It was like an old West gunfighter meeting the old school samurai, which is pretty much, you know anything about Star Wars, those are pretty much the two references that Lucas really drew on before those. So it was fascinating. It's certainly a chef's kiss out there, Theodore, for that Mandalorian episode. I could go on about this, but you actually have an options question as well. It says, my question is about the wheel strategy. I will try to keep this short for Dan. Oh, Dan, look, he knows your attention span is weak, sir. You're weak with the Force. So he's going to make this short one for you. He says, if one is doing a covered call right, why let the stock get called away? Wouldn't buying the call close to expiration be almost identical to letting the stock be called away? Same question for the cash secured put. Why get assigned? Why not just buy back the put near expiration? Wouldn't that loss be the same as getting assigned? I am probably missing something. Aren't they synthetically the same? Happy Thanksgiving. Well, thank you for that. Happy Thanksgiving to you, Theodore, and your family, and to all you listeners out there. I know it's afterwards, but we can still wish you happy post-Thanksgiving. Why not? Hopefully you have some leftovers left, and maybe you still got a few deals going on the old shopping out there. So, Dan, your attention span is short, so maybe you missed that at the beginning. But A, do you have any thoughts on The Mandalorian? Do you watch that show? And then B, to his actual options question, why let these things get called away, sir? Why not buy them back at the last minute?
Oh, man, you know what? I don't want to get Disney Plus just for The Mandalorian because I don't think I'll watch anything else.
I know, but you kind of have to. We don't really watch anything else either, but except for that, we watch it once a year.
Yeah. I mean, I was always a Boba Fett fan ever since, the first Star Wars movie.
Spoiler alert, he's in this season. Uh-oh.
Isn't that what is that what the show's about? Isn't it like Boba Fett centric?
It is not about Boba Fett, but it is people of his ilk, let me just say.
Oh, okay. All right, I gotcha. Yeah, I don't know. Maybe one day I'll break down and do it. Okay, so the wheel, or as I like to call it, the recycle trade. So there is a synthetic relationship between the cash secured put and the covered call for sure. But why would you want to take assignment, or why would you just want to buy it back? Depends on your objective. We cover this in our MTM Smart Income System course. It depends on your objective. So if you have the covered call, let's just start with that one, and the stock goes through your strike or maybe it's slightly through your strike at expiration, you have two choices: buy the call back or just let yourself get assigned and sell the stock. So, which one should you want to do? Do you want to own that stock after expiration? And if you don't, if you just want to wash your hands of the thing and be out, then let yourself get assigned. But if you still want to be in that stock, then definitely close the call. Now, that being said, the question is in the context of the wheel. So, if you let yourself get assigned and then you sell a put, you kind of still have the same position synthetically. But the important part of that is that you're choosing a different strike, right? You're probably choosing a different strike, probably choosing a somewhat lower strike. And so what you could do is, instead of letting yourself get assigned and sell the put, or instead of just buying the call back and sitting on your hands, is you could buy that call back and sell a call at the strike price where you would sell a put. I know that's a long-winded answer, but that's all I got.
It's a lot for a guy with a short attention span. Well done. I guess Theodore woke you up. There's all that talk of Boba Fett. Got you fired up. There, sir. Yeah, but Dan hit on the head. It really is your outlook there, Theodore. If you want to keep the position, then yeah, you might want to consider. Hopefully, you're doing it before the last second of expiration. Hopefully, you have this plan set up at the outset. So if you realize you're writing a covered call, but you really don't want the stock getting called away, or maybe you're a financial advisor, have a bunch of clients who are tax sensitive, they can't have the stock get called away, then you have to have that rolling plan built in at the outset. You're not waiting till the end of the day on expiration for, I got to buy this thing back because it's synthetically. No, hopefully you've got that set up earlier and you've done that roll earlier if that's what you want, or hopefully you've identified strikes where you don't mind either selling or picking up. In the case of the wheel, you're right. The whole point of selling the wheel is to kind of kick off the wheel. And otherwise, if you're just rolling the puts, then the wheel never turns. You never get the stock, which then, of course, you turn around and sell the call on to get out of. That's kind of the whole purpose of the wheel, or as our friends over there, Uncle Mike calls it, the triple income strategy. So yeah, if you're rolling the put, you're closing it for expiration, you're never wheeling. You're just doing the put leg and rolling it all the time. So yeah, people who do the wheel, that's kind of part of the point, is to get the stock and then wheel out of it. One of the legs of the quote-unquote triple income strategy. All right, next up we've got Joe Valles, maybe? It's kind of a bit of a somewhat, actually not quite expiration, but he's got a question about closing things out as well here, Dan. He says, if I have a long call butterfly and a long put butterfly spread, and the price goes against either position, is it advisable to get rid of the losing legs, in parentheses, and incur losses, or wait for them to expire worthless? Okay, we get this type of question a lot, usually around positions like this that have legs to them. Maybe you're thinking it's traditionally, your old iron fly, or maybe it's people like iron condors are a little bit less spooky for them. Obviously, they're going to have vestigial legs at some point. If the underlying moves in one direction pretty demonstrably, one of those legs probably not going to be worth too much. So the question then becomes, what do you do with that? He has a little bit of a different scenario. He has the long call butterfly. So remember, butterfly listeners, in this case, buying it. So you're buying one, selling two, and then buying one farther out of the money, and also a put butterfly spread. So it sounds like he's doing that in both directions away from the at the money. So he has a fly effectively spreading out away from the at the money in both directions. So he wants a little bit of bang for his buck. He needs some movement. And let's say he gets it. And he moves down to, hopefully, let's be optimistic. It goes right to the short strike on, let's say, the put fly in this case. So he's making max profit on his put fly. The call fly, not so much. So that becomes the question now. What do you do with that? Dan, I know you probably spend a lot of time over there at MTM dealing with this exact scenario. You put on these strategies and you have some vestigial legs there that aren't really working. What do you typically counsel people? You tell them to keep them on. Maybe they get a lower cost swing at the bat in case it reverts. Do you have them start taking them off? What is your methodology at MTM, sir?
I'm typically a big fan of looking at an option spread as a single unit. You're putting on the butterfly because you want that risk reward of that butterfly. And so, I try and discourage people from saying, oh, well, this option made money and this option lost money, so maybe I should take these off. And to me, that just becomes a little bit weird. I had a guy who emailed me just a few days ago who's like, yeah, I'm kind of new to options and maybe you can help me with this. I lost a whole bunch of money on these calls. And I'm like, oh, okay, well, let me read further. And he's like, yeah, I did these bull call spreads and the stock went up and I lost a bunch of money on the short calls. You made money. The spread, which is what you should be looking at, the spread made money. Don't worry about this one lost. You put the spread on for a reason. You look at it as a single unit. So that's typically my counsel.
No, I definitely like that approach, particularly for the audience of a show like this who are newcomers to the world of options. Taking things off piecemeal, that can start to get, as you mentioned, that can get confusing and or dangerous. You could be taking off a leg that is your risk protection, your risk mitigation against something very dire happening. Now you took it off, and so you could have all sorts of horrible things. I hope I'm reading your question correctly, Joe. If you mean like one side of the spread, if you mean like going into the individual spreads themselves and taking out pieces here or there that may not be working, then I'm definitely wholeheartedly against that. Then you're creating some sort of Franken monstrosity. So pretty much either way you intend this, Joe, we're not really big fans of it. If you have a trade, you put it on, it sounds like you put this on as a unit, then take it off as a unit. Unless, of course, you see some sort of demonstrable, huge move in this case for the put fly, then you could probably consider that a separate leg. And if the call fly is kind of just lingering, if you can still get a little bit of a bid for it to close it out, then you could probably go that way. But if you're putting things on in general as a unit, particularly if you have a spread and multi-part spread, don't start taking one little piece off here or there, because next thing you know, you've changed your risk profile completely, and dangerous and damaging things could happen, particularly if you're newer to the options market. Speaking of people who are new, let's go to this question from Maz. Maz wants to know, do you think it's bad that brokers like Robinhood are ushering in a whole new generation of options traders who essentially view options as surrogates for the stock? They're pretty much just buying calls and hoping for continued rallies. Well, a lot of people are asking about that. Robinhood gets tarred with all of this, but there's been an explosion of new options traders, across the board. TD has them, Schwab has them, IB, you name the brokerage house. They all have seen, their darts and their customer counts explode of late. It's not just Robinhood. Robinhood gets all the ink because they're kind of the sexy one out there, and they're catering specifically to this demographic that you're talking about here, Maz, the newcomers who are slinging the one lots. But either way, we had Henry on our election night special from Trader. He said there's about 1 million one lots hitting the market these days that weren't hitting even a year ago. So that's all coming not just from Robinhood, it's coming from across the board. But you're right, that's an issue though, not just with these new traders that are happening now. That's been an issue that I've lamented against since we've started the show, since we started this network. I've always tended to have the overall umbrella of retail tends to fixate primarily on delta versus the professionals who tend to look at things more from a vega and indeed a theta perspective. But retail, they look at things from a stock perspective. That's how they were trained. They buy a stock, they want it to go up. So they want to do that same thing with options. They want to buy a call, they want the stock to keep going up. So it's understandable that their first frame of reference for options would be delta. That's kind of been their way they've been trained in the marketplace. I don't think this is surprising. It's not a new thing. We're seeing a lot of volume of it, and probably more than we ever have seen before. So maybe that's why you're paying attention to it for the first time, Maz. But this is not a new phenomenon. Now it's incumbent upon the brokers, and it's incumbent upon shows like us and the exchanges and others to explain to people that there is more they can do with options than just swinging for the fences with some 5 delta calls and hoping for the best. We've seen an explosion of listeners to this show as well. So hopefully some of those folks are taking that message to heart and exploring what we've been talking about here. I do wish brokers that are the entry point for some of these new traders like Robinhood, I do wish they would spend more time on things like this, on education in general. It does seem like they are trying to remedy that, so that's a good thing. But I think it can never hurt to have more educational offerings out there for people instead of just coming in. I like Tesla. I want to buy these calls. That's usually a pretty rough way to go and usually not maybe the best path to long-term success. So I would like to see them put more effort on it, but I don't think you can say more people trading options, even if they are kind of monodirectional, is a bad thing. Dan, what are your thoughts on this, as Maz puts it, this whole new generation of options traders who view options as surrogates for the stock?
I think that options, listed options, are the single greatest financial product of our time. They level the playing field from professional traders to 22-year-old Robinhood traders. That said, as they say, the more you learn, the more you earn. And there's the old caveat emptor, it's amazing that we have the freedom to use these products, these same products that are used by professionals who dominate the financial world. But you got to know what you're doing. Like learn, read some books, make sure you're you're using these things in a smart way and not just, like Mark said, using them as a proxy for the stock and just buying calls and not looking at volatility and all that stuff. But yeah, I think the explosion in option trading is great. And not just because I'm biased because I'm in this industry. I just think it's a great tool for mankind.
Yeah, you learn how to drive a car. You don't just learn about the gas pedal. You learn about the stick shift or, the Prindle in the car, maybe in the automatic shifter in some of these new cars out there. You learn about, how to steer and everything else you have to do, lane changing, all the other nuances that go into driving a car as opposed to just accelerating and decelerating. And hopefully people will take that approach to options trading as well. Learn not just I got to buy a call and it goes up, but a lot more to it than that. Speaking of learning, our listener here, Red Bull Running, son of charging beer. That's a mouthful of a handle. He might need to do a little bit of learning as well. He says, hi, advice needed here, please. What to do in this situation? I have contracts that expire today. They are all down. He says, they're all calls and 2 put contracts. I have only a small account, so I try to close at market value. He sent us a screenshot here, Dan, of it's not really that informative. It's just a bunch of positions and a bunch of names like Space and a few others, SLV and a bunch of others. They seem like they're small positions. It looks like they're just, it's hard to tell even what the positions are. He says they're calls and 2 puts, but we don't see that. All we see is P&Ls, and they are all red. So unfortunately, Red Bull Running, son of Charge and Bear, there's not much we can do for you after the fact, after these trades have been put on. Looks like you're going to have to close them out and probably for a loss. But if you have a small account, this gets back to what we were saying earlier. It behooves you to spend a little time learning about these options things because it could help you avoid perhaps a scenario that you don't have to go out and just buy calls and buy puts. There's more you can do. There's spreads. There's more nuanced position. We talked about the wheel earlier. Maybe that's an interesting point for you. There's covered call. All sorts of things you can do in conjunction with or in lieu of the underlying because it's hard to tell what you've got going here other than a bunch of underlying positions and maybe some options too that seem like they're not going well here, Mr. P. And you know what? Since we have a related question from Frank, I will lump him in here as well with Red Bull Running here. Frank Bluestein wants to know, Dan, can I get a coach? So it sounds like Red Bull Running, son of Charge and Beer, and Frank have the same question. Dan, if someone were interested in getting a little bit of coaching to help them with their options trading, where should they go? What should they do?
Please make your way over to our website and just scroll down to the footer and click on the link that says one-on-one coaching. And we'd be glad to have somebody from our trader success team give you a call and just talk to you a little bit about it. See if it's a good fit. And if it is, maybe there's the opportunity to join us. And if it's not, that's great too. But at least you get to talk about it and see if it makes sense for you.
Yeah, and hopefully you avoid another screen of red here, like everyone wants to avoid there. Let's see, we'll come up against it. Let's see if we got time for probably one more. Let's go to Nicole here. Nicole Brown wants to know, is the CBOE the only exchange with an educational portal? This gets back to our educational theme of the episode. The Options Institute. I don't think I see any others out there. Well, you are technically correct when you're looking at the options exchanges out there, Nicole. It used to be every major options exchange, ISC, all the other ones, they all had their own educational arm because they viewed it as their responsibility to go out there and educate the retail public on what these options things were. Everyone thought from the beginning of this industry that education was pretty much the primary vector upon which the options tide would ride. And so far we've seen this year, it's been other things like a pandemic, locking everybody at home, make them interested in options. And unfortunately, we've seen a bit of a move away from the educational side on the exchange front. As you mentioned, CBOE has the Options Institute, which Dan used to work at. Kind of interesting, tying it all together there. A lot of the other exchanges have since closed that down and have since abdicated that responsibility over there to the OIC, the Options Industry Council. They do a great job. They sponsor a lot of shows here on our network. We've seen people pop up on the network from the OIC all day. They do a great job, but they're only one entity. It's kind of hard for one entity to make up for all the other exchanges that used to be out there helping to educate the folks about options out there. So yes, technically you are correct on the options front. If you get beyond the strictly options world, you get into futures and options like the CME. They do have an educational portal as well, Nicole, so you can go check them out for yourselves. Of course, you can always go to the OIC, optionseducation.org. But in terms of exchanges with good options education, SIBO is kind of the only horse in that race these days, unfortunately. Dan, you have some experience with the Options Institute. What are your thoughts on the exchanges all kind of moving away from that except for the SIBO?
I think it is the most foolish thing I've ever even thought about anybody thinking about. It just doesn't make any sense. I mean, if you create some new musical instrument, but somebody picks it up and they can't figure out how to play it, until somebody knows how to use it, they're not going to buy it. If people, even though, especially this year, there's been an explosion in interest in options, still most people don't know what they are. At your next family Christmas party, go up to each individual, talk to them about option trading and see what they know about them. Nobody knows anything about them. Nobody's going to trade this product if they don't know what it is. I believe it's a very, very foolish mistake to have abandoned education. It's just, and not in an altruistic way, but in just a business marketing way. It's just so foolish.
I couldn't agree with you more, sir. Yeah, unfortunately, we've seen most of the entities in this space, Nicole, evolve from, members-based entities to for-profit public companies. And once they do that, they have analysts and shareholders, and they have to watch their expenses. And so a lot of them, unfortunately, viewed education as a needless, unnecessary expense, and they trimmed it. Whereas Dan points out, that's kind of your best marketing out there these days. So I would love to see most of the major exchanges have some sort of educational arm. This is a conversation I've had with them in the past. I hold their feet to the fire on this. I think they should have an educational venue outside of just the OIC to do all this. Thankfully, there's shows like this, networks like this. There's places like Dan's, MTM you can go to make up for some of that, but I think it would be a great thing for everyone if all the major venues out there had some sort of educational portal and educational staff on hand to help you in these troubled and turbulent times. And Dan, we touched on it earlier. If folks need some help in these troubled and turbulent times, where should they go? What should they do?
Yeah, like I mentioned earlier, make your way over to markettaker.com. It's market like stock market, taker like take what is rightfully yours. And we'd love to help you any way we can. And if you're just exploring options, you want to kind of get your feet wet a little bit, I've created some really nice complimentary resources for you to learn, to get started, even some that are a little bit more advanced, no cost or anything. Please come and take a look. And for those of you who are really serious and want to look into one-on-one coaching, just scroll down to the footer and click that link and tell us about it, and we'll have somebody give you a ring and see if it makes sense for you.
Until the exchanges get back in the education, Dan is making it up for you. Heading on over to markettaker.com. Speaking of exchanges, this episode of Options Bootcamp brought to you by the folks over at Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to actually own one before they approach large strategic partners for funding. They've set up a crowdfunding portal so that regular traders just like you can have the chance to participate as well. Where do you go to find out more? It's just demandderivatives.com. DEMAND derivatives, so 2 D's in a row.com. And click on the crowdfunding portal, or just go to demandderivatives.com/crowdfunding. It spells it all out, what the minimum investment is, what you're getting, all that stuff. It's very interesting. I have participated myself in this crowdfunding campaign, but it only goes until December 15th. So if you are interested, if this intrigues you, and they have some very interesting products they're talking about over there, and a very interesting new approach to the markets. Check it out for yourselves to learn more. demandderivatives.com/crowdfunding. On behalf of Mr. P and our friends over there at Demand Derivatives, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions, and for watching so many great TV shows. And we'll see you back here next week, next Education Wednesday, for another episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.